All right, hi everyone. Welcome to today's webinar, brought to you by FXCM, where we'll be covering breaking news and setups. Just give me a second while I get everything ready, and just want to make sure you guys can see my screen. We should be seeing IronFX webinar series, breaking news and setup. I just want to make sure you guys can hear me loud and clear as well. All right, hi Jitnuka. All right, and do take note of the chat box and the Q&A windows as well. Please type your questions or any requests that you may have in this windows here, right? All right, okay, I think we're good to go. Oopsie, hang on. All right, okay. All right, okay. Screen, you should be looking at my screen as well, right? Wait, is it screen? Yep. Okay, screen two. Right, okay. All right, okay, I think we're good to go. Right. And yep. Okay. I'm sharing screen too. Yes. Just want to make sure I got that on right. Okay. Here we go. All right. Of course, before we start, do take note of the disclaimer. Of course, we have the risk warning as well. Uh, Products on IronFX are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Also, do take note of the disclaimer here. The information in this webinar should not be considered as investment advice or an investment recommendation, but instead educational material only. The material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. Right? INFX is not responsible for any loss arising from any information contained herein. All right. Okay. Hi, Joseph. Glad you could join us as well. Just want to make sure you can hear me loud and clear, and you can see my screen as well. And do drop your questions in the webinar chat window or the Q&A. All right. If you guys can see my screen and hear me, we'll start things off now. All right. Okay. Okay. My name is Ketan Ramachandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you between a special partnership. In a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for best FX research and equity research for 2019, 2020, and 2021. All right. There's just a simple agenda for today. So it's about breaking news and setups. So we'll just look through at some of the more recent uh news that cropped up this week, right? Hi, Riaz. I'm glad you could join us as well. All right. Do take note, we have the webinar chat and the Q&A windows open, so please drop your questions in those boxes, and you should be looking at my screen on my slides as well. You should be seeing the agenda for today. All right. Okay. So we had the FOMC meeting minutes released yesterday evening on 16 August, right? We also had CPI data from the UK as well. And this morning we had the Australian labor force report, which covers the employment situation in Australia with regards to how many jobs were added. Is there equivalent of the non-farm payroll? And they also updated their unemployment rate. And coming up in a couple of hours, we have unemployment claims from the US. Now, how have these two, or rather, these three recent news affected the markets, and what can we expect with the U.S. unemployment claims? All right, so basically, naturally, with the FOMC meeting, the minutes of the FOMC meeting, we can expect the dollar to be impacted, right, which would cause the dollar index to rise or fall, and hence all the majors will trade accordingly. UK CPI, we've seen UK inflation in the UK coming stronger than expected, which has caused the pound to be pretty strong. And then we had Australia labor force today, which showed the unemployment change actually dropping on a monthly basis, while the unemployment rate actually edged higher, which caused the Aussie dollar to fall this morning. And then finally we'll look at unemployment claims. All right, okay. So here's just a quick summary from yesterday's minutes with regards to July's FOMC meeting. Right, okay. So the Federal Reserve's officials, basically Chairman Jerome Powell and his fellow policymakers, right? They still remain concerned that inflation will fail to recede uh, as sharply as it has done over the last 10 to 12 months. We could see the last 10 to 12 months up till June's reading. Headline CPI and core CPI and headline PPI as well as core PPI have all fallen uh, relatively quickly, especially for the headline reading, but the core has been a little bit stubborn. But what is worrying was both headline PPI and headline CPI data for July actually increased on an annualized basis, right? So this is what is giving some concerns to policymakers, and that is why further interest rate hikes could be warranted, right? The next FOMC meeting coming up is in September, and it's quite likely should we see uh, further inflation proxies starting to show a resurgence in inflation data, is quite likely the Fed is not going to pause in September and they could raise rates again. All right. Okay. Then we had CPI data, which came out yesterday as well. So we can see here CPI, the headline CPI data printed at 6.8%. The previous reading was, I think this came in higher than the estimate of 6.7%. Core CPI came in at 6.9% year over year, which actually increased from June. June's reading was actually 6.8. So inflation in the UK is still relatively high and is actually quite stubborn. So this was part of the reason why we saw a relatively strong gain in the pound across most of the other trading currency versus the other pairs, right? And we'll go through the charts in a bit as well. Okay, and then of course with Australia labor force data, where we saw the unemployment rate increase from 3.5 to 3.7%, right? On a seasonally adjusted basis, the forecast was at 3.6%. So not only did July's reading come in higher than the forecast, it also came in higher than June's reading of 3.5%. Employment also decreased to 14 million. The estimate was for uh, about 15,000 jobs to be added in July, but actually the opposite happened. 15,000 jobs were lost. So this actually points to a weakening in the labor market for Australia, which is why we saw the Aussie dollar fall this morning. And it has been one of the, I guess, weakest currency pair, or it has been one of the weakest currencies this morning or for most parts of today. Okay, and coming up later this evening in a couple of hours, we have US unemployment claims. So what does this mean? This is basically uh, the American citizens filing for unemployment benefits. So if they are out of work and have not been able to secure a new job, they are likely to file for unemployment benefits. So as we can see, the last 2 weeks, okay, and this claims figures are released on a weekly basis, whereas the other data that we looked at are released on a monthly basis. Okay, so with regards to unemployment claims, they've actually started to tick higher over the last couple of weeks, which could be some concerns with regards to how robust the US labor market could be. And if claims continue to come in higher, this is generally acts as a bearish catalyst for the US dollar, right? So we should actually see the US dollar start to sell off, which would mean the dollar index would fall. And of course, euro dollar, pound dollar will gain, right? So this is what we can generally assume. Okay, so with regards to FOMC, right, let's just start off with that. When we'll go jump into trading view. Right, let's jump into okay, wait. Yeah, this is the Forex, this is Forex Factory, right? So just want to highlight this page to you guys as well. So what I was talking about, employment change, unemployment rate, as you can see, it increased to 3.7% versus the estimate of 3.6 and the previous reading of 3.5. And the good thing about Forex Factory, if you're not familiar with it, if you click on the folder icon and you click on latest release, it brings you to that page which I showed you in my slides earlier, right? So you don't have to worry about saving all the various data links or data sources or bookmarking them on your browser. You just have to bookmark Forex Factory and then click on the folder icon and go to latest release. It'll bring you to the relevant resource page. Similarly, it also has, sorry, not similarly. Additionally, if you click on the graph icon, you're also able to have a chart of that particular data point as well. So you get to see everything. You get a pretty decent snapshot of everything in on one page. Okay, now with regard to unemployment claims, right? You can see here the last 2 weeks, the readings, the claims figures have come in higher than the forecast, which generally should be negative for the US dollar. But because last week we had inflation data surprising to the upside in general or ticking or reversing, that is why we've seen the dollar have a strong finish to the week last in the previous week. Okay, and then if you look at CPI, right, we had CPI in the UK released yesterday as well. Why do I not see it here? Hang on. Just let me check my filters. Yep, everything is there. We have claimant count. What happened to CPI? Oh yeah, here we go. Here it is. It's on Wednesday. Yep, 16. So similarly, you can see uh headline CPI falling on an annualized basis. That's good, but it actually came in higher than the forecast, which and also if you go click on latest release, it brings you to the census website for the UK, and you can click on the latest consumer price inflation index here, website here, right? And quickly moving on to FOMC as well. If we go to 16 August, 16, yep. Where is it? FOMC meeting minutes. Yep. And we click on that and we click on latest release. It takes you to the Federal Reserve website and basically where the FOMC details are. And you're able to view the statements and the minutes as well. And also rewatch the conference should you wish to do so, right? So we click on the PDF here. We can look through the minutes if we wish for further details on what the policymakers were thinking. Okay, now let's dive into the charts. Okay, here I am on the dollar index. I'm on the 4-hour time frame, right? So let's just zoom in into the 30-minute time frame and just take a quick look at FOMC meeting minutes, which are released at 6 p.m. Yes, on 16th of August, right? So the 16th August, 6 p.m. 1800 hours is about here, right? So as you can see, in the aftermath of the release of the minutes, you could see dollar index actually push higher, jump higher. And even before that, if you just zoom out a little bit and go on to a weekly time frame, just to get some perspective on how the dollar index has been trading, you can see since the dollar index hit 99.50 and in early July, it has actually bottomed and bounced off this level to move higher. All right, it's a combination of several factors. Uh, one is also you can argue that traders who had been short the US dollar started to close out their position. Naturally, if you want to bank your profits on the short side, you have to start closing out the position, and you actually have to buy back the instrument. So with traders, with the short sellers closing out their positions, which is what we call short covering, it can cause the instrument to rise as well. This could be a stock, this could be a commodity or a currency pair. So in this case, the dollar index started to rise as short traders closed out their positions. We also saw stronger inflation data coming in over the last few weeks. Initially, we also had uh, unemployment claims, lower unemployment claims, which is positive for the US dollar. And of course, do take note, the opposite happens if unemployment claims are higher. That's negative. So in this case, in July, we actually had much lower unemployment claims figures in the US, which actually were pushing, uh, helping to drive the dollar index higher. All right, hi Damir, welcome for joining. Hope you can. I just want to make sure you can hear me loud and clear and see my screen as well. I'm on trading view right now. We're looking at the dollar index chart and I'm on the 4-hour time frame. Do take note, we've got the webinar chat windows as well as the Q&A windows up open. So do drop your questions in those boxes. Right. As you can see, we've had 5 strong weeks of gains for the dollar index, and partly due to a combination of short covering, lower unemployment claims in the earlier part of in July, and we've had uh, strong CPI data coming in last week as well, which have fueled the rise in the dollar index. So it's a combination of fundamental data points, macroeconomic data points, as well as positioning and short and technical analysis as well as caused the dollar index to rise. Do take note, 100 is another key level or a big figure where we can expect price to run into resistance or price to run into support. Okay, so now let's just go back onto the daily time frame. So so this is what we see in the last 4 weeks. Pound dollar index rising relatively strongly, and it's coming up to what we can say is a major resistance, overlap resistance, because as you can see, back in June and early July, price sort of did a double top here before proceeding to fall sharply, and we can see dollar index running into the same resistance level once more, right? Okay, so this is on the daily time frame. Okay, now let's go back onto the 30-minute time frame. So basically, we were looking at uh 16 August, 1800 hours, when the FOMC, when the minutes of the FOMC meeting were released, and in the aftermath of the release, we saw dollar index actually push higher again, as the minutes showed that that Chairman Jerome Powell, along with his fellow policymakers, remained concerned about resurgence of inflation in the US, which would mean that the Fed is quite likely to raise rates again in September. Right? Initially, there was a uh, not hope, but rather there was a general view that the Federal Reserve will keep rates on hold in September as well. But because we saw inflation starting to tick up in July, for the month of July, so we could see the Federal Reserve actually raise rates. Okay, so this is part of the reason why we can see dollar index rising. And then on a technical basis, on a technical analysis basis, we do see price hitting a very key resistance level, and it's retreating today as we speak. Okay, now how did we identify these support and resistance levels? All right, let's go through it together. Right. Okay, so as I mentioned earlier, the dollar index formed a double top in end of June, early July, and that is acting as a significant resistance level here. Right, let me tidy that up. Okay. And then with regards to the second resistance level, if we just zoom out a little bit, you can see back in June, when dollar index hit 104.34 and it pulled back, you could see it formed a double bottom here, although we do see the wick extending way below, but we see price pretty much hold steady or hold above this level before finally eventually breaking lower. So what was previously a strong support level will now act as a resistance level, right? So we have a strong resistance level here, which is identified as the second resistance, which is at 103.86. First resistance is at 103.54. Right. Not only do we have overlap, significant overlap levels to identify the first and second resistance, we also are using a combination of Fibonacci extensions and Fibonacci projections here. This is 61.8% Fibonacci projection and Fibonacci extensions, right? Okay. So let's just zoom in a little bit. Now, how do we get this extension and uh, projection levels? Okay, let's just delete it first so we can do it together. All right. So as price made this swing low here on 10th of August and then proceeded to make a swing high on 14th August, then pulled back to this swing low on 15th August, right? So we have 3 points here. So when we are trying to do a Fibonacci projection, we will use the trend-based Fibonacci extension tool. Do remember for Fibonacci, there are two available tools to us. One is the regular Fibonacci retracement, which involves 2 points. And then we have the trend-based Fib extension, which involves 3 points. So let's do the projection first, okay? So here we go. So we start from the swing low on 10th of August, go up to the swing high on 14th of August, and we end with the swing low on 15th of August. So we're going to pull up all the fibs first to get an idea of where they lie. So in the projection, remember it's 3 points, 1, 2, 3, and it's going to give us three levels: 61.8%, 78.6%, and 100% Fibonacci projection levels. All right. So I'm just going to adjust the labeling so that it's more visible. So as you can see, the 61.8% Fibonacci projection level lines up squarely with the overlap resistance at 103.86, which is identified as our second resistance. Right. So not only do we have a strong overlap level here, we also have a secondary factor to back up this resistance by using the 61.8% Fibonacci projection. So we have two factors that reinforce this level as a significant resistance level. Okay. Now, should price in the future break through 103.86, the next resistance level with regards to only the Fibonacci projection would probably be around 78.6 and the 100%. But if we look at where price is trading, you could see that we can argue that this is a relatively strong overlap as well, because you see in terms of price action, the dollar index running into resistance at 104.38 multiple times here before retreating. And of course, you have the absolute high of the wick here, which is just beyond the 100% Fibonacci projection. All right. Okay. So we're going to get rid of the other projection levels and just keep 61.8. Right. Okay. We also had a Fibonacci extension levels. Now, how do we find extension levels? We do it by using the regular Fibonacci retracement tool, which involves 2 points. So in this case, we start from this swing high here on 14th of August, and we end with the swing low on 15th of August. Okay, we're going to pull up all the fibs just to get an idea of where they lie. And as you can clearly see, once again, the 161% Fibonacci extension level lines up squarely with the projection level as well as the overlap. So we're just going to keep this level and adjust the labeling. All right. So now we can see clearly. So when we have more than one Fibonacci level aligned at the same price, we call this a confluence, or we call this a Fibonacci confluence, or confluence of Fibonacci levels. So this may sound a bit technical, but it simply means that you have more than one Fibonacci level at a particular price level, right? So this could be two retracement levels, a retracement and a projection, an extension and a projection, and so on and so forth. It could be any combination of a Fibonacci retracement, expansion, extension, or projection. Right? As long as there's more than one, we call this a confluence of Fibonacci levels. So we have actually three factors that's indicate that this level at 103.86 is a significant resistance level. One, we see the overlap here. Two, we have the 61.8% Fibonacci projection. And then the third one, we have the 161% Fibonacci extension. Okay, now what about the first support? Okay, so as you can see, previously, back in middle, or well, earlier this week, price ran into resistance at 103.25. Of course, the wick went a little bit higher, but generally you can see on the 4-hour time frame, where price has been relatively constrained at this level. But once price broke through it, naturally this level would then become our support. So this is how we've identified the first support, which is at 103.20. All right, 103.20 is our first support. Okay, now we also see price pulling back from the high, so we can also do a Fibonacci retracement. We can probably, let's see, should we do it from here? Right, I think this is probably a pretty decent. Okay, so I'll just repeat that again. We're going to do a Fibonacci retracement from this swing low going up to this, so from this swing low on 15th of August, going up to the swing high on 16th of August. So basically just this last 2 days, right? So we're going to do the Fibonacci retracement. It will pull up all the fibs, and we can see 50% lined up pretty well with this overlap level. So we have two factors that reinforce this level at 103.20 as a significant support level. All right, so let's just tidy everything up and keep 50%, right? So we can see now price pulling back, and it's quite likely that the dollar index could find support around this level, right? Which is a nice overlap, as well as the alignment with the 50% Fibonacci retracement. Okay, right. Now, what about the second support? How do we identify that? If we zoom out a little bit, there's no other overlap levels that we see, but we can see over here, back in 3rd of August as well as 8th of August, dollar index running into resistance at 102.80. So you can see this multiple, not multiple instances, but couple of times where price has run into resistance and retreated. We can see price making a significant swing here, right? We can see one significant swing here and the second significant swing over here, right? So all this took place on the 3rd of August, 3rd and 4th of August, 3rd of August and the 8th of August, right? So you can see the significant swings as well, which help us identify that this was a major resistance level, which is now going to act as a significant support level, which we are using to identify the second support. All right. So it's quite likely we're going to see the dollar index continue to retreat at least towards the first support. Now, going back to the news, we have unemployment claims coming up at 12:30 p.m. GMT. Do take note, my calendar's on GMT time. So at 12:30 p.m. GMT, which is in a couple of hours exactly, we're going to see unemployment claims. So what's been happening with unemployment claims? As we mentioned, the last 2 weeks, claims figures have come in higher than the forecast. So in this scenario, this is generally bearish for the US dollar, which would mean dollar index would also fall. But because last week we had strong inflation data, which overrode the unemployment claims, that is why we saw dollar index actually bounce last week. Now, with the dollar index already retreating today, and if the actual claims reading comes in higher than the forecast, which is 240,000, and also higher than the previous week's reading, it's very likely we can see the sell-off in the US dollar accelerate, which would mean dollar index continuing to fall. Right. So now in a couple of hours, that data point is going to be released, and it's quite likely that should the claims figure come in higher than the forecast, which also could mean is going to be higher than the previous week's reading, this is going to be negative for the dollar index, and we could see it definitely be driven down towards the first support at the very least. All right. Okay, so that's dollar index. We also had UK inflation data come up yesterday as well. So let's see, the data dropped at 6 a.m. GMT time. As we mentioned earlier at the start, headline CPI, although it's falling quite sharply, it actually increased. It was actually came in higher than estimate, while the core reading actually increased. Right. So if we go back um, to the slides right here, so this is what I mean. Core reading for the month of June actually came in at 6.7 or 6.8%, but July's reading ticked higher to 6.9%. So this is a bit concerning, right? So as a whole, UK inflation in the UK is still relatively high. It is historically high compared to its history, and also compared to in particular the US. So inflation in the UK is still much higher than in the US, and because core CPI started to increase in July, we saw strong demand for the pound yesterday. So let's just now jump back into trading view, and we're going to go look at the chart for the pound. All right. Okay, so let's go to the pound. Okay, let's just start off with a daily time frame to get a perspective on how this pair has been trading. Right. So as we mentioned, we had 4 strong weeks of gains in the US dollar, which meant dollar index was rising. So obviously, if you look at the chart for the pound, we can expect the pound to be pulling back during this period, and it is very obvious. You can see 5 weeks of declines, except this week we've had a relatively strong bounce in pound, partially driven by the higher inflation data that came out yesterday. All right, now let's zoom back into the daily time frame, and you can see that price is currently trading within a bearish channel, right? It's trading in a bearish channel, and for the first time in in about a month, in 4 weeks, we could see the pound potentially break through or break above this bearish channel, right? As we mentioned, we have unemployment claims coming up. So if this figure comes in higher than the forecast later this evening, dollar index is going to fall. So if dollar index is falling, uh, the pound is going to rise, right? The pound is going to very likely break through this bearish channel and make an attempt towards the first resistance, which is at 1.2779. Right. So let's just zoom in onto the 1 hour time frame. So do remember CPI data in the UK came out yesterday at 6 a.m. GMT. So let's see what happened back then. All right, just let me zoom in a little bit here. Okay, 16 August, 6 a.m. Right, so here we go. Right, so just before the data was released, pound was trading at about 1.27, right? And as soon as the news hit the wires, boom, we saw pound rise from 127 to go as high as 127.65. So easily 65 pip rise in 3 hours, right? 1, 2, 3, yeah, 3 hours, pound rising 65 pips. Right. And but it failed to break out, because after that, of course, remember what followed the CPI data in UK? FOMC meeting minutes, right? The minutes of the FOMC meeting, which were hawkish, which kept the gains on the pound, right? So, but now we can see pound making a resurgence, trying to break through the bearish channel as dollar index is falling, right? So if the unemployment claims in the US come in higher than the forecast, we're going to see the dollar index likely fall, and that would mean pound is going to push higher, at least towards the first resistance at 1.2779. So do take note of that. Okay, now how do we come up with the resistance levels? Okay, let's try and identify them. Okay, if you look at um, this price level here at 1.2780, we can see multiple instances where price has run into resistance, right? So we can see there's a big swing here. So there's a support, price broke through, then finally finding a small support here. And of course, we can see another big swing here. So resistance here, one, two, three, four times. So we can see four times where price has acted as, or this level has acted as a resistance, and two times where price has acted as a support. So 1.2779 is indeed a significant overlap level. And in this case, it's continuing to serve as a significant overlap resistance. That is why we have labeled this level as our first support. Okay. Okay. Let's just tidy up the chart. We don't need to see the swings. All right. Okay. Now, what about the second resistance? Okay. Second resistance is not so straightforward because we don't see any nice overlaps. But I guess we can say that because um, now that we have the bearish channel, we can argue that the first resistance would be at where the wick of this candle is, right? So, oh, hang on. Right. Okay. So where this wick took place, where this wick occurred on 10th of August. Okay, right. So this is how we've identified. Oh, the labeling is not right. Okay, this should be second resistance. All right. So this is how we've identified the second resistance. Okay. Now what about first support? Okay. So if we zoom out a little bit. Okay, let me get onto the 4-hour time frame where it's a bit more. This is what we normally use. We normally use the 4-hour time frame for our technical analysis. So I'm just going to switch to that. Right. So if you can see and we zoom out, you can see this level at 1.2670 has been a pretty significant level. As we can see, price bouncing off this level as a support here, right? Which was on, what was this, 3rd August, a significant swing here. We have another bounce here. And you could argue that, yes, there's a little bit of a swing here as well. So price has bounced off this level a few times very recently. And if we zoom out, and you can also see another significant swing here that took place on 10th of May, right? You can see price running up here and retreating. Well, yeah, general, you can see, yes, of course, there's going to be pullbacks along the way, but you can see the general uh, price action of the move, right? So we can see of multiple instances where price has bounced off this level, be it as a resistance or support, right? We are seeing a few relatively strong, significant swings, which is why we've identified this overlap support as a significant level and the first support, which is at 126.70. Okay, not only do we use that, we also had the Fibonacci retracement. Okay, so okay, just let me tidy up a few things here. Right. Okay, so let's just zoom in into this part of the chart. So you can see we did a Fibonacci retracement. We started from this swing low on 14th of August, going up to the swing high on 16th of August. Let's just pull up all the fibs here so we can see what we are looking at. Right. So we can see price finding support now as well around the 38.2% Fibonacci retracement. You could argue that this offers a little bit of this is a pretty decent pullback support. But the major support comes in at 61.8% as it lines up very well with the overlaps as we saw earlier. Okay, since now we have done this, I think, and we can actually see price bounce off the 38.2%. To me, I would identify this as an intermediate support, and I'm going to label it as such. right? So I'm going to label it as such. So this will be a intermediate support level for me. So I'm going to keep 38 and 61.8% Fibonacci retracement levels. Okay, 38 and 61. Let's adjust the labeling so we have a better view. It's still a bit messy, but okay. As you can see here, this level at 1.2710, you can see a significant, relatively significant swing here. We can see, and then after that, we can see price uh, remaining under this level before finally breaking higher, and then is found support at this level over the past few candles, right? Over the past 24 hours. So this level at 1.2710 is a pretty decent intermediate support that is identified with the 38.2% Fibonacci retracement as well as the overlap here. We can call this overlap or rather, yeah, a pullback level. And we can see the pound rising strongly, breaking out of the bearish channel as we speak, and making a move towards 127.79. Okay, what about second support? Second support is identified by this swing low here that took place at the end of June. You can see a very significant swing here. You can even count it as like this. So we can see that price has bounced off this level very strongly. So that is how we have identified the second support by using the swing low. The swing low here. Yeah. Okay. Now let's see what else is coming up. Okay, Australia. We also had where are we? Here. We also had the Aussie labor force market being released today. So let's go take a look. So this came out at 1:30 a.m. 17 August, 1:30 a.m. GMT. So now let's jump over into the Aussie. So similarly, Aussie has been in a big downtrend since 14th of July. So almost 4 weeks, right? Almost a month, 4 weeks. While dollar has been rising quite spectacularly over the last 4 weeks, Aussie dollar has been falling, right? Which is what we expect, right? And okay, so let's go back. Let's go zoom in into the 30-minute time frame and look for 1:30 a.m. today. Right, here we go. Even prior to the release of the data, we actually saw the Aussie dollar falling primarily due to the hawkish minutes that came out. So if we go back to 16 August, 1800 hours, which was about here, right, in the aftermath of the release of the minutes for the FOMC meeting on 16 August, 1800 hours. Let me get the dates right. Yep, 16. Yes, we saw the Aussie dollar continue to pull back. It's continued to fall, and then when the labor force report hit the wires, news of the labor force report hit the wires on 17 August early this morning at 1:30 a.m. The Aussie dollar continued to dive, going down as low as 63.65. It has since bounced off this level relatively quite strongly as the dollar is starting to sell off now. Now, of course, back to the unemployment claims. Should they come in higher than the forecast, we are then that's likely to cause or act as a bullish catalyst for the Aussie dollar to go up towards the first resistance, right? So we're seeing a very nice strong bounce in the Aussie dollar off the first support, or rather off the second support, and now climbing steadily towards the first resistance. And it could reach the first resistance should the fundamental data provide the correct um, catalyst for it, or the right catalyst for it. Okay, and pretty much I've come towards the end of today's webinar. If you guys have any questions or any requests or any requests for any analysis, please drop your questions in the webinar chat window or the Q&A window. And otherwise, let's see, what else should we look out for tomorrow on the calendar. We don't really have of anything noteworthy on tomorrow's calendar apart from retail sales in the UK, which are released at 6 a.m. Now, retail sales in the UK have been growing pretty all right. I would say it's a bit mixed results on a monthly basis, but the reading for July sales are expected to decline 0.6%. Now, if this actual reading, if actual sales figures actually uh come in lower than the forecast, that means coming in at maybe negative 0.7%, negative 0.8%. That means if the sales figures are worse off than the estimate, it is quite likely we can see the resumption or the sell-off to resume in the pound dollar. Right? Do take note of this. And apart from that, there's nothing else up on the calendar. With tonight basically being the unemployment claims in the US, that's going to be the last major economic news that's going to come out this week. So do take note of that because that's going to affect a lot of price. There's going to be a relatively high volatility in markets, and it's going to have an impact on the major pairs as well as gold. All right, we'll just round off with gold. As we all know, the dollar index, or rather the US dollar and gold prices have a negative correlation, right? They have a negative correlation relationship. So that what that means is if gold prices, if the US dollar, the price of the US dollar is rising, gold is generally falling, and conversely, if gold US dollar is falling, gold prices are rising. So this is what we've seen over the last few weeks as well, with the US dollar gaining significant strength, dollar index rising. So we can see gold prices pushing back, falling very sharply. But now, as dollar index is starting to sell off, we see a nice bounce in gold prices, and it's quite likely gold prices are going to hit 1,900 should unemployment claims come in higher than the forecast today. Right. Okay. Let's just quickly see how did we identify the support and resistance levels for gold. All right. We can also do a Fibonacci retracement. Now that price has formed the bottom here, we can start a Fibonacci retracement from this swing high on the 6th of August, ending with the swing low today. And let's just pull up all the Fibonacci levels. Right, we can see the 23 and 38% Fibonacci retracement levels line up squarely with the overlap levels that we had identified previously, right? So let's just keep 23 and 38. Right. Okay. Now, how did we identify the first resistance level? Because we see a pretty strong support level here and another significant swing here. We see a pretty decent pullback on 30th of June and a significant swing here on 6th of July. Right. So this is how we identified. This was previously a support level, which was broken through on Wednesday, which now is acting as a resistance. Similarly, this level at 1,912 was acting as a significant support level in the past. You can see a pullback here on 3rd of July, another pullback here on 10th of July, and a pullback here on 10th of August as well, before, of course, eventually price breaking through. So now this level is acting as a second resistance. So 1900 is the first resistance that aligns with the 23.6% Fibonacci retracement. 1912 is an overlap resistance that aligns with the 38.2% Fibonacci retracement. So that's how we've identified our resistance levels. And it's quite likely that gold prices are going to make a push towards 1900 in the next hour or so. Now, with regards to support, I think it's quite straightforward. If we zoom out, we can see a very strong overlap here at 18,089. Right? There's a significant swing here that occurred on 9th of February. And you can see a zone here or a period of a few days, a couple of days, where price sort of ran into resistance here on 13th of March and then found support on 15th of March. Right? Now, with regards to the second support, we are using this overlap here that occurred in January earlier this year, January, February. You can see price making a significant swing here, or falling very sharply, but finding support here. The swing wasn't very high, but you can see price was supported here and then ran into resistance on 10th of Feb and 14th of February. So you can see multiple instances where price has bounced off this level or reacted off this level as a support and then resistance. So that's how we've identified the second support. All right, let's see if we can find any other Fibonacci levels. Okay, let's see if we can do a Fibonacci extension. All right, let's see from here, this swing low going up to swing high. Do you have any Fibonacci extension levels that we could use? No, usually we try to look for 127 and 161%. I guess in this case, we can sort of use 145 Fibonacci extension as sort of a weaker argument for the second support, but I think let's just leave it out because generally we use the 127 and 161 percent extension levels because they offer more significance to any potential resistance or support. All right, so this is what we have for gold. All right, so do take note of uh, the unemployment claims that are coming up in about an hour and a half, in 90 minutes or so. Right. Okay, so we've come to the end of today's webinar. I hope this has been a great session for all of you. I'm just going to launch a poll and appreciate it if you guys could give your feedback as well. Yeah, I didn't receive any webinar questions or requests, but yeah, I hope you guys have enjoyed this today's session. And yeah, please yeah, give drop your feedback as well. All right. Thank you very much. Take care. Have a great trading week, and I'll see you guys at the next session. All right. Thank you, everyone.